Hello, trading has closed on November 3rd, 2023. As always, we'll start with our disclaimer, go over our calls, and make some predictions. My trading plan for Monday, which is November 6th, 2023. Just remember, I can be completely wrong. All trades should be made at your own risk. This has to be one of the most incredible weeks in stock market history. Let's just go over what we said. Look for the pattern with the early high, which is this. Monday should have the early low. We said if we didn't gap over this high, we should see lower prices, but the employment report came out today, and I never try to predict what happens at the open in those days. We gapped up, so there was no call. This is what we said. We also said that if we did drop, we could look for a long entry because there's a big rally coming. Oh, these are next week's daily patterns. We crossed two MEJT targets off the list, 43.49.66, 43.35.06. We have to add one, 43.08.11. When you gap in the other direction, doesn't have to print today, but it does print at some time. Even though these seem pretty far out of reach a week ago, they did print. Notice we stopped right at this green line, which is a prior FOMC announcement price. MEJT early on gave a sell signal, which I describe on page 120 of my book. Even though we were rallying, that signal worked, and it's already played out. We did get a sell signal in the afternoon. We got the minimum immediately. We don't have to get more, but we did. It did mark this spike up as a false move that had to retrace, which it did. When you hit the target immediately, that's support. It isn't just a target, it's support. And that support held for a while, but not into the end. This was our 9 bars down with time to marks set up for his sequential and combo indicators. Started at the actual high here, 43.73.20. That price is resistance. The high was 43.73.62. Now you can go for one of these bars past resistance, but you don't have to. So this really stopped right at his resistance level in a fraction of a point. This is the opposite of the pattern we saw just a week ago when we said it was a possible market low. In a strongly trending market, which then was lower, this was higher, we gapped up, hit higher highs, and closed under all these highs. If maintained at the open, that's negative in any event, but it's particularly negative on a Friday. It's very hard to turn these things around on a Friday because the public isn't interested in fighting the trend. When you hit new highs as recently as the last hour of trading and can't hold on to any of them, it shows one of two things. One is it's profit taking. If it's profit taking, we'll gap and overtake this high fast. If it isn't profit taking, it means that all the people who want to buy have used up all their ammunition. In that case, we'll see lower prices. And it should be obvious before the open. We can't take this out early and ideally gap over it. This is a negative pattern. We should see lower prices. That's a negative pattern hitting right at resistance. We're going with this alternate count. It's a beautiful count. Works within 3 decimal places at least, completed a major ABC going back through the early years of the 21st century, even the last year of the 20th century. As long as this recent low holds last week's hope, we should have a huge rally, but it doesn't mean we go up tomorrow or Monday. We said we had a gap over this trend line to continue the rally, and we did, but we stopped right at a 61.8% retrace of this last drop. In addition to the resistance we've already shown, we now have Fibonacci resistance. Last week I said a friend of mine had a system for identifying highs and lows, and his system pointed right to last Friday's low. He's now pointing right to today's high. Now, it isn't always going to work, but that's his time and that's his price. We also hit this trend line in a straight line move. You know the rules, either you gap over that line or the line wins. If we don't gap over today's high, we should see lower prices. If we trade over this high without gapping, they shouldn't stay. Last week we showed this dark blue trend line. We said it marked a possible low. We're now showing this red trend line with this hit, this hit, this hit, this hit, and hitting it today. Straight line move up to the trend line as resistance. Either you gap over it or the line wins. Well, Monday's pattern has the early low regardless of where we open. Typically it's a bullish day with a high and a final hour, but if it isn't bullish, if it's bearish instead, we should see more weakness in the days to come. We now have a situation opposite to last Friday's low. We gapped up, hit a higher high, but closed under relative highs, and if that's maintained at the open, this should lead to lower prices even if we don't close lower. There's resistance at the high from a Fibonacci retrace, trend lines, a prior FOMC announcement price, and a TDST line. Unless we gap over Friday's high, I think we see lower prices even if we don't close lower. All predictions for lower prices here have a higher than normal risk of failing because last week's low should be a very major low, as long as it holds, and lead to much higher prices. Of course, if we gap up, take this high out, the whole idea is killed. But if we don't take this out by gapping over it, I think we're going to trade lower. And don't forget, these price targets don't have to print anytime soon. But it would be nice to cross some of them off the list at least, particularly this one at 43.0811. Not that we have to on Monday. So it's the pattern with the early low. It's usually positive. And if we don't gap over this, I think we're going to trade lower regardless of where we close. And that's today's call.